to explain to you guys how you can take profit in the market. Understanding liquidity and market structure itself will give you confidence in the market and will also help build your edge in the terms of when you are taking your profit, because your entry is as important as your exit. Okay. And then secondly, when it comes to risk to reward, it all depends on the kind of trader that you are and your win rate. Okay, so you can decide to take any risk to reward that you want. That is none of my business. I'm just here to teach you where price is more likely to move to next. Okay. Now I'm going to find the simplest way for me to explain it. Okay, at least for now. Now the simplest way for me to explain it is that in the chart we have what we call external highs and external low, which means the highest point and in the lowest and lowest point. Now the simplest way for you to understand external high and external low, the lowest point I put in the highest point is the external high and the external low. Okay, we have market structure shift here, have our inducements, market break structure again, price come back to maybe other block or breakout block, and then maybe markets come to a support level here, market create market structure shift, inducement again, market come, create another break of structure, and then finally come to tap into this one, and then price take out this external high. Now since price has taken out this external high, market is going to either trade keep going up or come back to take out this external low. But before price take out this external high, your take profit for each trade is going to, you are going to be targeting the highest point. Let's say we have a market structure shift here, market structure shift, we have our inducements, we have our points of interest, right? Now since price did not come to this point of interest, market broke structure again, gave us another inducement, and then broke structure. So here we have one market structure shift, one break of structure, one inducement, our POI, but price did not come to the POI. We have our break of structure, inducement. This once inducement is price did not respect it. This inducement is a candle as well, can be another block any week. So this is our point of interest. This is the one closest to this inducement. Now your take profit, you are going to target each high. Okay, your first take profit will be for, let's say, your first take profit will be for price to take out this high. Okay, you are not going to target this highest point straight. No, your first take profit, price take out this high, you wait again, look for another structure. Your second take profit will be for price to take out this high. You wait again, you look for another structure until it's clear that there's no resistance level holding it before you target this main high. Now as you have targeted this high, you already know that if market rejects this level, it will either be for price to take out all this liquidity zone here, or for price to come to 50% of the market. maybe come down to, let's say, um, come down to 50% of the chart like this before going back up. Okay. Now, if you enter, once you already seen the market structure shift and everything that I've explained in my previous video, I'll put a link to that video here. You can go watch it. You already know that your next take profit, the same way you took profit when the market was going up, that is the same way you are going to take profit when the market is coming down. Now, your first take profit is going to be this liquidity zone. You look for what we normally look for again. I've already explained that strategy. The second take profit is going to be here. On and on like that, you are going to be targeting the nearest liquidity zone. So let me go to the chart. Let me actually explain it to you. Okay. Now, since price took out this highest point, this was the previous high, which means the external high in the 4-hour time frame. Another thing you need to pay attention to is in the time frame that you are in. You need to go to the higher time frame. So this was the lowest point I put in that highest point. You need to go to the higher time frame to actually see where price has taken out. Okay. Now, since this is the lowest point, this is the highest point, price took out this highest point. I said that markets can either come down to take out this lowest point or come to respect, let's say 50% of the chart itself. Let's use the, since there's no candle here, there's nothing yet to actually stop the market. We only have this order block. That was the reason why market came to this order block. You see that when price get to this level, market consolidated, but there was no structure here to actually hold the market. There was an imbalance here, so market will definitely feel it. Now, since price has respected this order block, right? Since price has respected this order block, then we confirm a market structure shift. Now, this is a higher in the higher time frame. I'm not analyzing the market. I'm just telling you how to take your profit, right? So since we enter here like this, you can see that my first take profit for this trade, let me explain this first one. My first take profit for this trade was for price to take out this high, right? I already know that market is coming to take out this external high. Market is coming to take out this high. Okay. But you don't control the market regardless of the knowledge you have. You don't control the market. Okay. Market can decide to push up and then start going back down. So your take profit is going to be the highest point, the highest point, the liquidity point closest to the level that you want to take your profit at. So you see that the take profit for this second trade was for price to take out this high, right? Since market is below this one, the take profit for this particular trade for price to take out this high. Okay. And then market moved up, we had a market structure shift. Now the take profit for this sell, okay, because we are still in an uptrend, this sell is just a temporary pullback. Okay. You can see that the take profit for this sell, I did not target this lowest point. The reason for that is because we are still in an uptrend and the market is just retracing. Market might decide to respect this support level. That was the reason why I put my take profit at this support level. You see, and since price respect this support level, I took another buy again. The take profit for this buy was for price to take out this highest point. You see that I did not target this high. because this highest point is the one closest, is the closest liquidity zone in my take profit area. Okay. Now the take profit for this one is for now price to take out this high finally. Okay. Now after price take out that high, the take profit for this one, you see that I did not target above this liquidity zone. The take profit was for price to take out this high. So you see that systematically you have taken your profit at each liquidity zone. And if you observe, most of the time, if market gets to that liquidity zone, there will always be a reaction. So that is why it is better for you to target the nearest liquidity zone when taking your profits. After you have gotten the level that price has taken out, which means price has taken out external high or external low, and then your take profit will be the recent high that is closest to your take profit level. Now after price took out this high, just like what I've explained in some of my video, since this is a 4-hour high, a 4-hour recent high, which is a 4-hour market, you are going to wait to actually see the market's reaction. Okay, if price keeps trading above it, which means it tells us that the market is still in an uptrend, we look for a buy. The take profit again is going to be this recent high. Okay, so you see that the reason why the risk to reward is very big. It's not that you're actually targeting the you're actually targeting unrealistic point in the market. No, the reason why the risk to reward is big is because of the entry. It's because of the entry. So if you want to get a better entry, I'm putting the link to that particular video in this particular video for you to go and watch it. So it is the entry. Now since price take out this external high, because remember that this is still an external high in the 4-hour time frame. Since price has taken out this external high, market will either come down to this lowest point. For example, let's say okay, I break a structure. This was the lowest point. Okay, market will either come down to this lowest point, come down to this lowest point, or respect levels like maybe support level, breakout block level before pushing back up. But the most important thing is that since price take out this external high with a liquidity zone, um, price take out this external high with a candle wick, signifying that market is respecting this high. You see that when price came to this highest point, market traded above it like there was nothing there, right? But when price approached this level after taking it out, market started trading below it. Now if you are looking for a buy at this particular zone, maybe you are looking for a buy position from all these support level or breakout block or other block level, market is going to reach your stop loss. The reason for that is because price has taken out the external high liquidity. Now market will need to come back to take out the external low or balance itself in a very center level between the external low and the external high, which means like the 50% of the charts between the external low and the external high. Okay. Now let's move on to the next. Since price came down to actually respect this other block level, I don't even know the kind of candle that is here, depending on the broker. But since price respect this, let's say support level, I already told you guys how you can enter the market. So this video is only about take profits. Now your take profit after confirming your market structure shift, your take profit again is going to be this highest point, liquidity zone, this long week liquidity. Now you see that the first take profit, the first two take profits were to target this liquidity zone, right? But then as soon as price trade above this key level resistance in the 4-hour time frame. Now remember that I'm not taking the entry from the 4-hour time frame. I'm not taking the entry from the 4-hour time frame. Bear in mind, I'm not taking the entry from the 4-hour time frame. The entry are taken from the lower time frame. But the take profit are target the higher time frame liquidity zone because of what I've also seen in the highest time frame, right? Now, since price is above this resistance level, you see that this trade take profit was for price to take out this internal high, okay, which means for price to form another higher high. That was the take profit for this particular trade. I did not target any resistance level again. There are two reasons for that. The first one is because this place, the market actually create an imbalance here, so there's not actually anything to stop the market around this level. That was why I target this high. I talked about this trade in my previous video before this one. Now since price has gotten here, you are going to wait again to see what market is going to do. Now for this particular trade, I've done my analysis. Maybe if you are watching this video today on Friday, I don't know, maybe this might just be a signal, but it's not a financial advice. Like, so if you take it, only risk what you are going to lose. Okay. Now since price came to take out this external high, I wait for market structures shift, inducement, this and that, then I take the trade because I already explained it in my previous video. Now you see that the take profit for this particular trade, let me go back to the 4-hour time frame. The take profit for this particular trade is this lowest point, which means this nearest liquidity zone in the 4-hour time frame. The reason for that is because price took out a 4-hour level. Now market will need to go back to respect another 4-hour level. Okay, you see that I'm also looking forward to buy from this breakout block here. I'm looking forward to buy the market. My expectation is for price to come down to this breakout block and then we buy back up. That's just my projection. Okay, that's what I'm seeing in the chart and based on my strategy. Okay. So you see that taking profit, knowing the level that market is going to take out next will increase your confidence and will also make you to be able to build a better edge. Now if you're taking this trade, for example, if you don't want to target this high, you can just, depend on your risk to reward appetite, target this highest point, have risk to reward, but you already have the awareness that market is going to take out this high. Now it's now your choice to just decide on what to do with your risk to reward. Okay, so if you're taking this trade, for example, you can decide that, okay, since there's a high probability that market is going to take out this high, why not not I just target this high. So well, English is not my language, man. So you can decide to target this high, short your risk to reward, but you just need to have that awareness as a, some confluence to add to your confidence in the market. So that is just how you actually get to take profit in the market. It's just knowing where, it's just targeting the nearest liquidity zone in regard to where price is coming from. Okay, in regard to where price is coming from. That's why you work with the higher time frame and the lower time frame. Okay, if price take out a 4-hour support, if price take out a 4-hour liquidity high, which means a 4-hour external high, 4-hour highest point, market is going to find its way to either reject from a 4-hour order block, a 4-hour breaker block, or maybe a 4-hour order block or a 4-hour breaker block. Because regardless of the candle, it will either be a breaker block or an order block, maybe a fair value gap, like imbalance in the market. So that's just how you take your profit. And then secondly, taking profits also depend on the kind of trader that you are. Okay. So the kind of strategy that I preach is that I'll tell you what works, I'll show you what works, but there are just some decisions you have to make on your own, like your take profit level, your risk to reward. That's all depend on you. But it is essential for you to know where price is, the nearest liquidity zone that price is going to take out.